everyone. Welcome to the Stock Market Morning Prep video for Monday, May the 5th, start of the new month. Well, at least we have a full week of the beginning of the week of a full month, so that's a good thing. We did have non-farm payroll numbers come out, and sure enough, we did have that cowboyish whipsaw ride up and down until they finally figured it out. And what basically it was, non-farm payroll numbers did have a big blowout number, but the participation rate was not positive for the economy, so skewed the low employment numbers. So not good here, not good at all. I think the Fed is getting backed into a corner, going to have to do something soon, and the June monetary policy meeting is going to be a very important one. So I think between now and June, we're going to see a pickup in volatility here. So remember, be very careful. Risk happens very quickly when you least expect it. And Friday's price action, which was so dull, as a matter of fact, the whole week was just terrible price action, but and showed all kinds of signs that the market is ready to move lower, and did not do so. Okay. Again, we are working with a very heavily manipulated market by the Federal Reserve. So we need to understand how the price is working. But when you have, and I'm going to go through the indices, the main picture is the bonds. When you have bonds breaking out, that's a very big sign that equity markets are about to move lower. And I've been stating that for the last couple of weeks in these videos. Here is the 30-year. We have this big inverted head and shoulders, like I mentioned to everybody, and I've been pointing this out for days and days on end. We have a breakout, and this is a real breakout now. This is just not a quick breakout and then fail like we did back here. This is a full-fledged breakout. Now, of course, we don't think we're going to just literally just rally straight up. So there will be pullbacks and little flags like this in between, which I do think should be bid up. So if you want to look to get long, the TLT is probably going to be your best bet here for a long side trade for further upside potential. Now, what happens when bonds get strength? The equity markets will weaken, right? Money comes out of equities and goes into bonds in the safe haven sector. So you have to be careful here. And also we're coming into a seasonal time of weakness for equity markets between now and usually end of July. We start getting that choppy area, but volatility does pick up for the next 6 to 8 weeks, especially when you have this important Fed meeting coming up, the policy meeting in June. I think you're going to have a pickup of volatility between now and sometime mid-June. So we're going to have at least good 6 weeks of I think, good trading to come. So don't get one-sided here, because the markets want you to feel like equity markets are moving higher. But believe me, from what I see, it's given us all clues that we want to move lower. And again, and I'll point that out to you again in these videos, is the bonds. Number one, let's take a look at the dollar. Now, the dollar popped up on the non-farm payroll numbers, as you can see here, but came right back down again. Now, we do have a little bit of seasonal strength in the U.S. dollar for the next few weeks, but again, it's just, an indicator to say, okay, seasonal trends usually happens here. It doesn't have to, right? The only way we know this is when price moves in that favor, in that direction. Okay, so remember, price is what pays us. That's the most important thing. So we have this big, large head and shoulders pattern, and of course we have this descending triangle, as you can see here. So we have two bearish patterns. Still did not trigger this 79 area break. Once we break below that, then I'd be looking for some good strength in the commodity sector and weakness in equities. But watch the dollar as well. So that's going to be number two. Number three is obviously the yen. The yen has strength in this in the early morning session here, and I like the yen as of right now higher. There's a lot of overhead resistance though, and as you can see here, we've had some really crazy moves in the yen. But we have this inverted head and shoulders, right, which is bullish, but only bullish when we break this neckline. And then, of course, we have this ascending triangle, which we're back in it. Now we're getting closer to the apex. Okay, once we break out of here and break this area out, then we should be looking at higher prices. Remember, when the yen starts to break out and continues with some strength, you're going to have weakness in equities, okay? So that's what the three big ones I'm looking at, the dollar, bonds, and the yen, to give me further clues. Now let's dial down into our indices. We have the U.S. equities, right, the ES, the future contract, the 1272 extension, which held pretty much all of all of 2014, but with its first shot at it was early March. and failed again. Okay, so not sure. Could it break back up here? Sure, it can. But keep an eye out. We do have some weakness early morning this morning in the pre-market. So let's see if this does hold again. Now, if it does hold and you get some further downside movement, again, non-farm payroll numbers were actually not good. So we could see some weakness, especially when you have strength in bonds and strength in the yen this morning. We could see some downside movement in equities today. Okay, diamonds. Now the diamonds are held up the best out of pretty much all of the 5 indices that we follow. Is that good? No, it's a leader. It's not. It's not. Excuse me. It's a lagger. It's not a leader, and that's why I like to kind of put everything in perspective as a whole here. So we have this big area of resistance, and yet again we failed. We tried to break out, we failed, and again we're sitting right on it. So the Dow Jones looking the best out of the 5 really isn't so great. It's not our leader. Not that it can't influence, but it really isn't influential like, of course, the transports, which is the IYT ETF. So we had a movement in the transports, and then we reverted back down again. Now, we did not have an outside day reversal, right? Because Thursday's move was 137.35-ish, and we are back in that range. So let's see what happens today. Could this put some sort of reversal candle? It sure looks like it on Friday, but we need some movement to take out 137.51. If we could take out Thursday's low, 137.35 on a closing basis, then I think we look back to go back into this large ascending triangle that we broke out previously. Okay, look at the volume. Volume is terrible. On this move up, all this move we had some lower volume. That's not good, especially on this secondary move up higher. We had no volume at all. So that tells me, we got some problems here. The bigger factor is the 2 indices, is the IWMs and, of course, the Qs, the technology sector. Now, the IWMs, why is it important? It's a good gauge of risk, right? Risk on, risk off. If the investors are healthy and they want to buy the markets, they look for more risk to get paid. So IWM is a good gauge of risk. And do you think this is a bullish chart? Absolutely not. Lower lows and lower highs. We have series of bear flags, and this one here just looks like another bear flag breaking underneath these 2 trend line areas of resistance from the March 2012 lows, November 2012 lows, excuse me. No volume again on any up movement. Very, very dismal price action if you were looking at it intraday on a 5 or a 15-minute chart. So terrible looking chart. One of our leaders not leading, not playing a participation role of moving higher. We did have, of course, the transports, but transport's starting to now lose a little bit of its luster, or a little bit of its leadership role, if you will. And lastly is the Qs. Now, look at the Qs. The Qs did okay for a few sessions, but again, same thing like the IWMs, lower lows and lower highs, no volume at all. Our leaders of stocks, the Amazons, the Baidus, the Googles of the world, the Teslas, the leadership role, the growth stocks that actually took leadership early in 2014 are now gone. They are not leading anymore. So we have money rotating out of growth going into value. That's number 2. And also we have money going into these safe haven sectors, utilities, high interest REITs. And bonds, obviously in bonds, and that's where they want to hide through this possible volatility, which looks like it is coming. So keep in mind, guys, it is a hurry up and wait. And last week was just so quiet, but I think it's the calm before the storm. We are in a seasonal time of weakness. Selling may go away. That doesn't have to happen. Of course not. It's only something I want to point out to you, that all of the cards are showing me right now. All of my analysis is showing me lower prices. Now, if we roll back to the upside and we start breaking out the 1272 extension, then listen, all bets are off. We have to make changes and adapt to what the markets are giving us, okay? So keep that in mind. Hope this analysis helped. Remember, if we are headed lower, and we are lower today, stick with the trend. The trend is lower, and we got plenty of movement to the downside, so look to sell any kind of weak rally on any weak stock today, okay? Now, yes, if the market trends and breaks lower today and stays lower, then obviously there's you don't want to be chasing anything to the downside, okay? So just keep that in mind. All right, guys, have a great day today. Hope everybody enjoyed their weekend. It's going to be a very interesting week, to say the least. Have a great day again, and we'll talk to you tomorrow. Take care.